ago, and there's such a good response, and everybody always loves it when he comes on. So we're happy to have him back. And what we did, just to kind of give you an idea with the link that we're posting, basically, yeah, there you go, Arian. Basically, when you go to that link, you put your name and email in, and it automatically emails you some links. It'll email you a link to a free intro to Nadex video that Dan Cook did of Nadex. It'll also send you a free link to Daryl's video library, and then also the link to open a Nadex account if you're interested in doing that. But we're going to do some live trading on Monday, and so anybody that registers at that link, I'll shoot an email out this afternoon to you to come on Monday and watch some of this stuff in a live market. We'll put Daryl's scanner to use. So we appreciate you guys taking the time to be with us. At this time, I'm going to turn things over to Steve. Let me ask you a question. How many people, hey Bob, here's the link. It's tradingpub.com/Nadex. So again, tradingpub.com/Nadex. So I'm going to get Steve's slides loaded and type in a yes or no. Yes or no. How many people like paying taxes? Type in a yes or a no. Yeah, there's a couple people. Well, here's kind of an interesting thing to think about. If you're paying taxes, it means you're making some money. All right. So again, you don't have to hate paying taxes. I know that everybody, not yeah, within reason, and we could probably get into a 24-hour debate on that. But we asked, I get the question a lot of, I get tax questions a lot because obviously with trading, you make money, you lose money, and then you're going to have some kind of tax consequence. And so a lot of people ask me, yeah, is this bug? Yeah, we're recording these answers and sending them to the government. But a lot of people will ask and say, hey Morgan, what should I do as far as this goes in taxes? And honestly, I can't tell you. I'm not a CPA. I'm not a professional. I can I do what I do. I use a CPA, and so we thought it'd be a really good time, seeing as it's the end of the year. That we bring on somebody that is a tax professional. So again, I'll turn things over to Steve. Steve's going to come on here for about 30 minutes for the presentation, then take some Q&A as well. So we'll put a timer up for him. But Steve, if you want to try your mic one more time, if it's working, great. If not, we can get you dialed in over the phone.
Is everybody hear me okay?
All right, hey, Steve, I'm going to dial you in over. No, the mic is not working. I'm going to dial you in over the iBridge. Okay. So I will dial you in real quick. If you turn your mic off, and then we'll get you dialed in. When you answer the phone, you'll be live in the room. So give us just 1 second here. And make sure, Steve, to mute your speaker so you don't have feedback. All right, we're about to turn you guys live onto the deduction machine. All right, can everybody hear Steve?
Is that better? Okay.
All right, Steve, you're good to go. Just make sure to turn your speakers off so we don't have an echo. All right?
How's that? No echo? All right, perfect. All right, good morning. Thank you, Morgan, and I wanted to thank Morgan and TradingPub for hosting the event today and giving me an opportunity to come in and talk about my favorite topic, probably your least favorite topic, but one of my favorite topics, and that's taxes. You guys talked about using fibs in your trading, but in the tax world, we can't use fibs on those tax returns. That's where we'll get in trouble. And this is a Romney strategy. That's great. Well, anyways, Daryl told you guys and went through his presentation about how you can make money, and I'm going to go through in the next 30, 35 minutes and talk to you more about how you can keep those profits. Try to keep as much as you can in your own pocket. Start with a quick disclaimer. This presentation is informational, educational. It's not intended to be any specific tax advice. I understand that everybody has a unique situation, and what we're going to do today is just kind of cover a broad overview of trader status and some of the benefits of it, and then I would encourage you to seek out professional advice if you get more and want something more specific to your situation. Now, here's my philosophy. My philosophy has always been, obviously we live in a great country. We have to pay taxes, but there's no law that says we have to leave a tip. And what I mean by that is that, the tax code is there for your advantage. It's for you to go through and to try to take advantage of the things that are already on the books in order to minimize your taxes. There's nothing in the tax code that says you have to pay the maximum tax. And that's what I do at Shrink My Taxes, and it's kind of why I named my company Shrink My Taxes, is I'm all about trying to help people pay the least amount of taxes possible. So today, I'm going to quickly review trader versus investor. What we'll be talking about is, if you're trading in the markets, you're classified as an investor. And I'll talk about how you can rise to the level of a business trader and some of the advantages of that. I'll talk a little bit about entities for traders. I don't think I have quite enough time to go in depth to talk about trading corporations today. But I do want to really hit on the impact of Obamacare and how that's going to affect traders starting next year, starting in less than 30 days. It's going to happen. And then we will open it up for some questions at the end. So trader or investor? Are you a trader? The problem with this is that the IRS doesn't really give us a clear definition. If you go into the Internal Revenue Code and read about where they talk about trader in securities, they don't give you a lot of guidance. What we do know comes from court cases that we've seen, and I've listed some of the more prominent ones there, Moeller versus the U.S. and Stephen Paoli and Frederick Mayer and Rudolph Steffler. There's actually a case here just recently too. But as an accountant, as CPAs, we were able to go out and gather information from these court cases to be able to help people and tell them what they need to do in order to classify themselves as a trader. So here's what the IRS says, and I've put the link up there if you want to read it for yourself if you're ever bored in the evening and trying to fall asleep. But it falls under tax topic 429, traders and securities. And you'll see how specific the IRS is here, and I say that sarcastically. You must seek to profit from daily market movements in the prices of securities and not from dividends, interest, or capital appreciation. Your activity must be substantial, and you must carry on the activity with continuity and regularity. So I know what you're wondering. What does that mean in English? So here's the breakdown. What does the IRS look for? They look for 4 specific things that in order to qualify as a trader in securities. They're going to look at your holding periods. They're going to look at the frequency that you trade and the dollar amounts that you're trading. They look at the extent to which you pursue this activity, and they're going to look at the amount of time that you devoted to this activity. Those are the 4 primary things that you want to be aware of when determining if you qualify for trader status or if you don't. If you miss one of those, now what does that mean for your tax return? Okay, that means you're going to lose your home office deduction. That means you lose investment seminar deductions. It's going to limit your margin interest deductions. You'll be subject to wash sale rules, and you're not going to be able to elect mark-to-market accounting for your trading business. Understand that if you claim trader status and you don't meet those requirements, but you file your return as a trader, you might get those deductions up front. But if you get audited and the IRS disallows that trader status, that's where you're going to get nailed. That's where you're going to get hit with penalties. You're going to get hit with interest. So it's very important to know what these rules are so that you can avoid that trouble. So if that information wasn't clear enough, I kind of liken this to the if anybody saw Pirates of the Caribbean, and you remember when they were talking about the pirate code, and one of the guys' comments was they were more like guidelines. Well, this is my pirate code, if you will. This is my trader code, and these are the guidelines that I would encourage you to kind of get to know a little bit in order to determine if you're going to qualify for trader status. First of all, a substantial portion of your liquid net worth should be in your trading account, should be trading the markets. You should be weekly buys and sells in your account. Daily is even better. You should have a substantial number of buys and sells spread throughout the year. Remember that continuity aspect of what the IRS looks for. They don't want to see an individual who's traded 90% of their trades in the first half of the year, nothing the rest of the year up until December where they might do some tax loss selling. That's not continuity. They want to see consistent trading throughout the year. You want a substantial number of buys and sells. Generally, if you trade north of 500 trades, and if a lot of you day trade, you shouldn't have trouble qualifying for that. You'll be okay. If you're 1 to 200 range trades through the year, you're going to have a pretty hard time qualifying for trader status. Typical holding periods should be under a month. So if you, I know I get questions about guys, individuals who swing trade. You know, they might take a position and hold it for a month. That's okay. It's still as long as you're hitting some of the other requirements. Obviously, if you're trading weekly and daily, that's even better. You should spend a substantial amount of time watching and trading the markets. I encourage at least 3 hours a day, and encourage a time block. You know, if you work and have a W-2 job or work at an outside business and you're trading more part-time, that time log is going to become very important because you might spend time researching the markets and not do a trade, and that's okay, but you have to keep that time log because if you get audited, you're able to justify that, you know, I didn't trade that day, but I spent a few hours researching. So very important stuff. The last thing that I would encourage you is to maintain a business-like operation. You know, run this like a business, and that's exactly what it is. You're in the business of trading securities. So you want to keep good books and records, keep trading journals if that makes sense for you, but run this like a business. So the good news about trader status is that there's no formal election. Now, what that means is there's no box to check, and there's no form to fill out or anything like that in order to claim trader status. You just have to get that activity levels and things like that I talked about a few slides ago. So what that means that there's no formal election, well, that means that you can claim trader status for 2012. I mean, if you activity is at a level that you should qualify for trader status, you can file your return as a trader in securities and be able to take your deductions, which we'll talk about here in a few slides. That also means that if your activity was such over the last few years that you would have qualified for trader status, well, the good news there is we can amend those returns up back to 2009. And you can file an amended return, include a Schedule C to put your expenses on, and get money back if you had to pay taxes in those years. So some good things there for you if you haven't claimed trader status on your tax returns. If you aren't sure if you qualify, I've got a free trader analysis on my other website. I've got two websites set up. Shrink My Taxes is my general site. TraderTaxCoach.net is the site specific for traders. But if you go to TraderTaxCoach.net/trader_status, you will see the trader analysis. And you can fill out that analysis and submit it, and I will review it for you and get back with you. With my thoughts on whether you should qualify or not. Please be sure to put in your name and email address. I can't tell you how many analysis that I've gotten that didn't have any contact information, so I had no idea who sent it and no way to get back with the individual deductions. So let's kind of look at some of the things that you can deduct that you're not going to be able to deduct if you were just a investor. So going down kind of the list here, chat room subscriptions. So if you pay a monthly fee for a chat room that you belong to, that's deductible. If you have data feeds like DTN IQ, DTN Market Access, that's deductible. Software subscriptions, Investor RT, which is the software that I use, or Market Delta, that's deductible. Newsletters, newspapers like Wall Street Journal, Investment Business Daily are now deductible. Trading books and publications, those are deductible. If you have a separate line for your business or cell phone, those can be deductible. Your internet access is deductible because obviously you need that to trade. The big thing, educational seminars and webinars. So if you pay to attend a seminar, or you pay to attend a webinar, not deductible if you're an investor, fully deductible if you are a business trader. Wages paid to family members. I'll talk about this in a little bit, but those are deductible. So I had a client who actually paid a son to do computer work for them because they weren't that tech savvy, and they paid them to do it, not deductible if they were an investor, fully deductible as a business trader. If you're renting office space, that's deductible. You can take a home office deduction, which can increase your deduction by thousands of dollars. Your cable can be deductible. Computer and office supplies are deductible. Depreciation is deductible. Legal fees, tax preparation, if you work with a tax preparer or a CPA, that's deductible. And the big one being margin interest. That's deductible. So if you trade on margin, as an investor, you're not able to take that margin interest expense. You have to put it on a Schedule A and itemize, and all it does is offset any interest on your trading that you've had. So if you've gotten dividends or you've gotten interest, it'll offset that, but you could have substantial margin interest that has to get carried forward and you're not able to utilize. That's not the case if you're a business trader. You can deduct your margin interest 100% on your Schedule C. So that's a huge thing right there. So let's take a quick look at a client. This is actually a client that I've had that came to me recently. Worked with a CPA for a long time, substantial amount of activity, no question that they qualify as a trader in securities, but guess what? Their CPA did not understand trader tax status. And as such, they kept filing the return as a individual investor and not as a trader. So let's take a look at when they approached me and I was able to analyze, and we actually amended the past returns, but let's look at the difference. They had a $100,000 gain in this situation. So if you can see right here, the $100,000, that was their gain. This is the taxable income, these big bars up here. Not able to deduct their margin interest, but we took it here, and that took their taxable gain now down to $75,000 because we took 100% of that margin interest. We added the home office expense, which added about $3,000 of deductions. Now we're down to $72,000. We added the education and chat rooms that they belong to, which amounted to right around $5,000. So we're at $67,000 of taxable income. Now we took it for computers and technology that they had purchased through the year. We dropped it down to $62,000. So you can see here is the tax difference. As an investor, they were taxed at right around $19,100. Qualifying for trader status, you can see the difference here. It was almost $10,000 and taxes saved. They owed tax of $93.50. So I was able to get them a $10,000 refund, and obviously earned my keep there with that one. So you can see that it does make a huge difference being able to take these deductions on your tax returns. So let's talk about what I think is the golden ticket for traders, and that is mark-to-market. If you're not familiar with it, I'm going to give you kind of a brief overview of mark-to-market and what it means for an investor. This may or may not make sense for your individual situation, so it'll be something that you'll want to consider, but I want to make you aware of it because this can be something that can make a meaningful impact on the taxes that you pay. So what is mark-to-market accounting? This falls under the Internal Revenue Code Section 475F. What it basically is a change of accounting method. If you trade, whether you're a trader or whether you're an investor, you're taxed as a cash basis trader. And what I mean by that is that you're paying capital gains and capital losses. If you elect mark-to-market accounting, what you're doing is you're changing the way that you account for those gains, and you're making them ordinary gains and ordinary losses. So you're moving from capital gains, capital losses, to ordinary gains and ordinary losses. So you're probably thinking, as the sign says there, so what? What does that mean? Well, what that means is ordinary losses can be deducted in full against any type of tax return income. So if you lose, and I'll show you an example here in a second, but if you lose $20,000 in the markets, you can take that $20,000 loss 100% against any other income on your tax return. That includes interest income, that includes W-2 income or self-employment income. If you end up generating a net operating loss, you can actually carry another benefit is that you're not subject to wash sale rules. So you don't have to worry about wash sale rules if you're a mark-to-market trader. So if I've efficiently confused you, let's kind of look at these side by side. Here we have a trader who is under the cash method. This is, if you have not elected mark-to-market, this is how you are taxed today. If this over here is a trader that has elected mark-to-market. So under the cash method, the gains are treated as capital gains. Short-term gains are taxed as ordinary income. And I highlighted that because if you are a trader, most of your gains are going to be short-term. So you're taxed as ordinary income anyway. If you are a trader under mark-to-market, your gains are taxed as ordinary income. Now, why do I make that point? I make that point because if you, if mark-to-market makes sense for you, you're not penalized on your gains. You're taxed the same. Now, let's take a look at why it makes sense if you lose money. Losses under the cash method or the ordinary method are limited to being offset by trading gains, and then you're able to take an additional $3,000 off against other income sources on your tax return. You can't take carry back losses. You have to carry them forward, and again, those losses are only offset capital gains. But if you're a mark-to-market trader, your losses can be taken in full to the extent that you've got other income to offset those losses. You can carry back the losses up to 2 years and then carry them forward up to 20 years. So that makes a big difference. So let's look at put some numbers to this to maybe help illustrate this a little bit better. So cash method trader, we both have $20,000 losses in the cash method versus mark-to-market, and we have $100,000 of W-2 income. Perhaps they're a part-time trader, perhaps their spouse works, but we've got $100,000 of W-2 income. So you can see here they lost 20 grand. They were able to take $3,000 off of their taxes, making their AGI $97,000, and they've got to carry forward $17,000 of capital losses. Taxes due is $18,258. The mark-to-market trader is able to write off the entire $20,000 loss against the $100,000 income, making their AGI $80,000 and the tax due of $13,258. So current tax year savings is right around $5,000 for that mark-to-market trader. So that can make a lot of sense. It makes a lot of sense for individuals who trade stocks, options, ETFs. I always encourage those types of traders, again, circumstances can vary, but more than likely, those types of traders, mark-to-market makes the most sense. Now, how to elect mark-to-market? What I'll tell you is that you don't want to make a mistake with this. This is something the IRS looks at pretty carefully, obviously because of the benefits that we just talked about. They want to make sure they're getting their tax revenue, so they scrutinize this mark-to-market stuff. If you claim mark-to-market and you mess something up, but again, you filed your taxes that way, well, the IRS is going to be kind enough to hit you with penalties and interest if you've screwed up. So I would encourage you to work with somebody who's qualified in this area, who knows trader tax status and knows the rules of the road so that you don't run into this. If we've got time and if I don't get to your question, you can obviously email me and I'll make sure I get back to you with the right information. So should you incorporate your trading business? I get this question quite a bit as well, where individuals aren't sure, do I need to incorporate, do I not need to incorporate in order to operate a trading business? So let's look at why you might want to form a trading entity. I'm going to give you some guidelines here in the next few slides about why you might want to form a trading entity. If you've got further questions or for more specific for you, call me. I give out free 30-minute consultations. I'll spend some time on the phone with you. We'll go through your situation. I'll give you the pros and cons of each of the different entity types and try to help you arrive at the best decision for you. So that's something I'll do for the people who are on this webinar today. So let's look at why you want to form a trading entity. Audit protection is a big one. Sometimes individuals are concerned. They might work a full-time job somewhere and whatnot, but audit protection comes up. They're a little bit concerned about getting audited by the IRS. So we'll talk about that here in just another slide. Retroactive mark-to-market election filing. Let's say that you're a regular trader. In other words, you haven't incorporated and you missed the date to file for a mark-to-market election. You can file retroactively with a trading corporation. So you can incorporate and elect mark-to-market through your corporation and have that for the remaining part of the year. Also, revocation of mark-to-market. If you're trading in an entity that has mark-to-market and you want to go back to a cash basis trader, it can be difficult because you have to petition the IRS in order to get rid of mark-to-market, and they might not allow you to do that. And so you can always close your entity down and go back to being just a sole proprietor trader. If you're a part-time trader, and we'll talk about that in a slide, and then more tax deductions with retirement plans and health insurance, we'll talk about that. So audit protection. Audit protection, a majority of trader cases that I see that go to tax court are filed as sole proprietors on a Schedule C. There's very few cases that go to tax court for an entity that files a separate tax return. In other words, an LLC or a partnership or an S-Corp. So if you're a sole proprietor, just looking at the overall audit percentages of the IRS as of last year, sole proprietors are 3 to 5 times more likely to be audited than owners of S-Corps, partnerships, or LLCs. So something to keep in mind. If you're concerned about being audited, historically incorporating, you're audited a heck of a lot less than just being a sole proprietor. Part-time trader, or if you have W-2 income. So you might have a full-time job, or you might work part-time somewhere, or if you have a spouse who is employed and makes substantial money, forming a trading entity may make sense for your situation, because what happens is you're going to file a separate tax return. You're going to keep that off your personal return, make it a separate tax return, and it'll come back into your personal return through a K-1. But again, 100% of the activities of that entity are going to be focused on trading. So it's more likely to qualify and fly under the IRS's radar if that's the situation. This is the predominant reason somebody would want to look at forming an entity. And the reason being is that in order to take advantage of retirement plans, in order to take advantage of health care deductions, you need earned income. And so if you trade full-time and you've got no other income other than your trading, the problem you're going to run into is that the IRS views trading gains as passive income. It doesn't matter if you're a sole proprietor. It doesn't matter if you've incorporated through an entity. All of your trading gains are considered passive, and thus they're not able to, you're not able to use that income and contribute to a deductible IRA or another type of retirement plan or a fund health care. So with that being said, incorporating now gives you the ability to either pay yourself a salary through a W-2, or you could pay your spouse and generate earned income. Your business gets a deduction for those wages. You get earned income, which you'll have to pay some employment taxes on, but it gives you the earned income on your tax return that you then are able to unlock retirement plans. You then are able to unlock health care expenses. So that, in my opinion, is one of the predominant reasons that somebody would want to incorporate. Health insurance deduction is a big one. The situation here is that if you create that earned income, you're able to expense up to the amount of your income the health care expenses, for health premiums. So if you have anything left over from your income, though, in other words, if you have more expense than you have income to offset it, the remainder has to go on a Schedule A. And I've put an example there. If you had a $10,000 expense but only generated $5,000 in trading revenue, you can take the $5,000 deduction for health care, but the remainder is going to go over to Schedule A. So sole proprietor traders, you've got no way. If you are single and you trade through a sole proprietorship, you've got no way to generate earned income. You can't pay yourself in that situation. If you were married, you could pay out an administration fee to a spouse and generate the earned income that way. But if you're single, then you're going to look to incorporate and be able to pay yourself a W-2 out of that. I put this up here at the bottom. It's highlighted Section 105 plans. If you have an entity, I don't have time to go through Section 105 plans, but I do have a I actually do have a presentation that I put up on YouTube that talks about Section 105 plans, and it tells you how you can deduct 100% of your out-of-pocket medical expenses. Not just your health premiums, but everything that you spent on medical out-of-pocket, and that would include braces for your kids. That would include, doctor visits, co-pays, things like that. You can do those through a Section 105 plan. It's very specific, and there's a lot of details into it. So check out that video. I think I give you my YouTube. It's youtube.com/shrinkmytaxes, and you'll see how to deduct 100% of your medical expenses is the name of that video. So let's talk about the tax impact of Obamacare. Now, I know there's some people that love Obamacare, yay, and there's guys like me that absolutely don't like it. I think it's more a tax bill more than anything else, and more designed for control. So, but there are specific provisions in this that are going to affect traders starting in about 30 days. So I want to bring your attention to 3 of the most prominent ones that I see. So let's look at this. Medical expense deductions. I talked about that briefly when we talked about health care. If you're claiming medical expense deductions on your Schedule A, right now there's a 7.5% floor. That's going to rise to 10% starting in January of 2013. So what that means is, as the example shows, let's say you had a $100,000 adjusted gross income. That means 10% of that being $10,000. The first $10,000 of your out-of-pocket medical expenses are not deductible. So let's say you spent $12,000 in medical expenses for the year. Guess you're only able to deduct $2,000 of that 12. Through the Section 105 plan I talked about a few slides ago, you'd be able to take that entire $12,000 deduction. So it's a huge benefit. It keeps everything off your Schedule A, and I think that's going to be a very valuable thing for individuals that have a lot of medical expenses. Second thing, there's a 0.9% surtax on earned income. And so this won't hit you as a trader, but it will if you have a spouse who works or if you've got another job or another business that generates earned income. There's a threshold. Single filers, it hits over $200,000. So if you make $300,000 in earned income as a single filer, $100,000 would be taxed at an extra 0.9%. Married filers, that threshold's $250,000. So anything over $250,000 is subject to that 0.9% surtax. So the big one, though, that I see is this 3.8% Medicare surtax on unearned income. And so as a trader, that does hit you because unearned income is what they're targeting, and that's how they classify trading gains. So I want to spend a little bit of time talking about that. Let's look at this. So what this means, this Medicare surtax, it hits single filers over $200,000, married filers over $250,000, and self-employeds. How it's calculated is it's the lesser of your net investment income or the excess of modified AGI, your adjusted gross income, over those thresholds that I just talked about, the 200 and the 250 for married people. So I know I've probably utterly confused you, but let's look at some numbers, and hopefully I can make this a little clearer for you. So here's the situation where we have a single filer. They have a $150,000 W-2 job, and they made $100,000 trading. Their AGI, combining the two, is $250,000, and their threshold was $200,000. So they're $50,000 over the threshold. The $50,000 is lesser than their trading gains, so that's the number that's calculated for the tax. So $50,000 at 3.8% is $1,900 in extra tax. Thank you, Mr. Obama. Let's look at a married couple. Married couples, in this situation, they have $140,000 in W-2 income, $120,000 trading gains, so their AGI is $260,000. So they're $10,000 over the threshold. The $10,000 is less than their $120,000 trading gains, so that's the number that we use to calculate the tax. And in this situation, it's not too bad, only $380 of extra tax due. But what happens if you're a successful trader? And let's look when we put some different numbers in here. Here's a married couple that has a W-2. Let's say the spouse works and makes $100,000 a year on a W-2, and maybe the husband trades and makes $450,000 trading that year. So he had a great year. So let's look how this would affect it. Your AGI is now $550,000. They're $300,000 over the threshold. $300,000 is less than their trading gains. The trading gain was $450,000, so the $300,000 is the number we use to calculate the tax, and you can see that it's pretty hefty. We just paid an additional $11,400 taxes, paying our fair share. Thank you very much. And let's look at a different situation. Let's flip those numbers around. Let's say that we've got the spouse who makes $450. Maybe they have a medical practice or something, and they have generated a very high income, and we have a $100,000 trading gain, so still a pretty good year. Same AGI of $550. So we flip the numbers around. We're still $300,000 over the threshold, but the $300,000 over the threshold is greater than the trading gains. So we're going to only tax the trading gains. That's taxed at 3.8%, and that's an extra $3,800 of tax due. So what does this mean for successful traders, as you saw in the last two examples? Well, what it means is, yeah, you guessed it. You know, if you make a lot of money trading, you're going to end up paying an extra 3.8% in taxes with anything over those thresholds. So keep that in mind, and I think that's going to really make tax planning extremely important as you're able to try to take advantage of pre-tax dollars and minimize your tax burden going forward. Okay, so let's look at this. I've got a few minutes here, and so I'm gonna breeze through a couple of these. This is an important one because it pertains to mark-to-market, and I have had this question repeatedly. I haven't. This is an individual who did not elect mark-to-market, and they've already accumulated a lot of capital loss carryovers. Wanted to know if they went ahead and elected mark-to-market, can they use the losses they already got against future trading gains? Unfortunately, no. The capital loss carryovers are only going to be used against capital gains. So if you elected mark-to-market, it creates ordinary gains, and only ordinary losses offset them. And this is why I mentioned before that it's really a specific situation. You want to review this and see if mark-to-market makes sense for you. Because guess what? If this individual, let's say they had $100,000 of trading losses that they're carrying over and elected mark-to-market and made $100,000 the next year, well, they're going to pay taxes on the $100,000. They'll be able to take $3,000 off under capital loss rules and carry over $97,000 in capital losses for the next year, but they're going to have to pay taxes on that trading gain that they've had. And so that's where it gets into a situation where it might or it might not make sense to elect mark-to-market in those instances. Are you responsible for self-employment tax? Only on earned income. I get this question again. If I trade and I'm a business trader, that means I'm going to have to pay self-employment tax. It doesn't. So if you trade as a sole proprietor or if you trade through an entity, remember what I talked about, passive versus earned. All your trading gains, whether you are trading as a sole proprietor or whether you're trading through an entity, is unearned income. Therefore, it is not subject to self-employment tax. It will be if you pay yourself a 1099 or a W-2. You'd have to pay payroll taxes. But if you just had trading gains, you are not going to pay self-employment taxes on those gains. That doesn't pertain to prop traders. So if you are a proprietary trader for a firm and they pay you a 1099 miscellaneous, you have to pay self-employment taxes on that money. Or if you're a futures trader that you are a member of or a dealer, but for most of us out there, you're not going to pay self-employment tax on those dollars. I'm running out of time here, guys. So the deals with that. How is Forex taxed? I get this question, can I still hold long-term investments in my trading account? You can. Again, remember the pirate code I talked about, or the trader code. You've got to meet those other requirements, but that doesn't mean that you can't have a long-term position you're holding on to in your trading account. Titling accounts, and let's kind of wrap this up, and I'll take some questions. So what to do next? I would encourage you, if you're not sure if you're going to qualify for trader status or if you want kind of my opinion on it, to go to the website, fill out and submit the trader evaluation, and I'll get back with you and we can talk about whether it's going to make, whether you're going to qualify for trader status. Remember, it's not too late to claim how to do that. You can also amend past returns. So in 2011, 2010, if you traded with the same activity level but you didn't claim trader status, we can go and amend those returns and get refunds for you. Something to think about here at the end of the year. Should I make the mark-to-market election? That's something that, I'll spend some time with you on the phone, and you can we can go through your situation and see if that's something that makes sense for you or not. And if you have any further questions, If I run out of time today, you can email me at info@shrinkmytaxes.com, and I will be more than happy to answer your questions. Also encourage you to, if you want the free report I put together, the 5 biggest tax mistakes that traders make, you can actually email me as well at the same email address. Just put report in your subject line, and I'll email the report back to you. You won't get any spam from me or anything like that. You'll just get the report back, and if you have questions, you can reach out to me again. Let's see, free tax analysis. This is something else that I offer out for people who've been on this webinar, is the free tax analysis. So I always say you wouldn't drive your car just looking through the rearview mirror. And what I mean by that is that if you use your own tax preparation software, or even most CPAs and accountants out there, they do a great job of putting the right numbers in the right boxes on the right forms and filing them by the right dates. But then they call it a day, and they move on to the next client. And again, that's like driving your car just using your rearview mirror. If you really want to pay less in taxes, you can't just settle for recording last year's history. You're going to need somebody that can help you write it with a complete menu of proactive concepts and strategies that ordinary tax preparers often overlook. What I do at Shrink My Taxes that's different is I use tax planning, and that starts with a proactive review of all of your income and expenses. And my goal is to really ferret out every legal deduction, every credit, every loophole, and every strategy that's available to you before you file that tax return. No red flags, no gray areas, no aggressive moves. Everything that I do is court tested and IRS approved. So for the free analysis, if you want to email me, I can review past tax returns and find any of the mistakes or missed opportunities that might have cost you extra thousands of dollars in taxes. And then I can show you how you can proactively go back and get those dollars. So that's something I offer out as well. Chief Justice of the United States, William Rehnquist, he said there's nothing wrong with a strategy to avoid the payment of taxes. The Internal Revenue Code doesn't prevent that. Remember what I said at the beginning of the slide. You have to pay taxes, but there's nothing that says you have to leave a tip. So keep that in mind. I appreciate your time today. There's my contact information up there. You can reach me at info@shrinkmytaxcoach.net. My YouTube site is up, youtube.com/shrinkmytaxes, and you can always reach out to me on Twitter @shrinkmytaxes. So if I've got any more time, Morgan, I can open up for questions, or if we need to simmer it down a little bit, that's fine. Just let me know what the time situation is, Maureen. See, we're generating some very healthy conversations on the screen here. We have time for questions, Morgan, or? You guys can type in your questions. I can get to them now. So if you previously typed a question that I scanned through, you can type your question in now, and then I'll take them until Morgan tells me to quit. Morgan cries uncle.
Yeah, Steve, why don't you take about 5?
813, that's a great question. About 5 questions? Okay. So Morgan says take about maybe 5 questions. The quick one there is 813. That's Tampa, Florida. I'm down in beautiful Tampa, Florida, home of the rebuilding Bucks for football fans out there. And so I work with people all over the U.S. I've got clients in Washington, D.C. I've got clients all the way up in New York, all up the East Coast, Chicago, West Coast, California, Oregon, Washington. I've got clients all over the place. What was that one? Let's see. Does trading indices get the 60-40 split? That's a great question. Let's see. Let me go back a couple slides because it'll show you if you trade indices. Under Section 1256 contracts, it depends on if that indice is categorized as a Section 1256 contract. So if it is, you do get 60-40 taxation on that. And for those that aren't aware of that, futures contracts and any Section 1256 contract, excuse me, is categorized as a 1256 contract, gets 60-40 tax treatment. That means regardless of your holding period, Take a sip of water, sorry. Regardless of your holding period, the gain is taxed at 60% long-term, 40% short-term. So that's really advantageous if you trade those products. So what broad-based stock index options that do get it is if you traded options on NQ, ES, YM, SPX, NDX, RUT, and TF. If you traded options on those indexes or the indexes themselves, you would get you'd get that 60/40. Okay. All right. Any other questions? That was a great question. Okay, yes. Is it too late to select mark-to-market for 2012? Yes, you can't do it retroactively. You need to apply for mark-to-market. In this instance, for 2013, it would have to be submitted with your tax return by April 15th of next year. So in order to get mark-to-market for 2013, you want to make that election and file it with your tax return before before the filing date in 2013. If you file your tax return and then say, oh, I wanted to elect mark-to-market and try to amend to go back and elect it, it's too late. You've already filed it. You should have filed it with your tax return. So that's why I say you want to make that decision right now and make plans on making that. Great question, James. Thank you. All right, I can take a few more. Anybody else? Bueller? 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 Well, or am I not seeing questions? Maybe I have to scroll down a little bit. If I incorporate at your site, in which state is the entity? Okay, so James Paris, if you incorporate at my site, what state is the entity? Entity is going to be in your state. I get this question, because everybody talks about maybe incorporating in Delaware or incorporating in Nevada because it's supposed to be super secret and all this stuff. Understand that if you incorporate in Nevada, you still have to register your corporation in your home state, and you still got to pay state income taxes. So all you've effectively done is create extra fees for yourself by incorporating in Nevada. So, I had a client that had like 5 corporations in Nevada, and they were in Pennsylvania. I mean, we closed the Nevada corps down and kept the Pennsylvania corps, and cut her fees by about $5,000 a year. I mean, it didn't make sense. So it's going to be your state, and I would encourage you, James, if you have questions on the incorporation, just give me a call, shoot me an email, and we could spend some time to go through your situation, try to figure out what entity makes the most sense for you. But it would be incorporation in your state. So futures index, not to cash, yes. I have an S corp. Any tax traps my CPA might miss? Wayne, potentially. I'd have to know your situation. It'd be hard for me to kind of go through and throw general things out there without knowing more about your particular situation. So could be potential things that your CPA might miss. If your CPA doesn't understand trader status, they could be missing a lot. I just got a client that I picked up who had a big corporate business. They have a substantial corporate business, but they also trade. And they took, their CPA doesn't understand trader status, their corporate CPA. He showed them all of my material, my websites, my material, and his CPA encouraged him to contact me to take over and do the trader portion of their taxes because they just didn't understand it. So yes, Wayne, there could be a lot of things they miss if they don't understand trader status. Gardner, can holding periods be weekly? Yeah, you can have weekly holding periods. Just just make sure that you're keeping notes because obviously if you're doing weekly periods, you're probably still watching the markets. Just keep track of that stuff, and you'll have some more documentation. The more documentation you have, the better in the event of an audit. My fee, it's a good question. Depends on the service. So if you're looking at tax planning is a different service than tax preparation. Tax planning, is something that I do, and I encourage. If you're a successful trader, you want some tax planning because you can really go through and do some strategies to really cut your taxes. But my normal fee for trader taxation, if you're a sole proprietor, is $300. which includes state returns if you have one, and for entities, if you're incorporated through an S corp or an LLC or a partnership, it's 500, and that includes your personal return as well. So it's 500 for your corporate, plus personal, plus state returns. So hopefully, Steve, that answers your question. Let's see. Do you prepare taxes for self-employed? I do. Benjamin, great question. I do. Trader status is one of my specialties, but it's not all that I do. So I do have a lot of small business clients, Schedule C and other S corp and even real estate clients is who I work with as well. So yes, Benjamin, I can do all that stuff. Thanks, Barbara. Yeah, and by the way, on my fee, I don't charge extra for my time. So what that means is that if I've got clients that call me or email me for tax questions, and I handle those. I don't bill extra for that stuff. Tax planning is getting into a different situation. If we need to do strategies and things like that, it's going to be a little bit different because that's going to fall into tax planning. But just for simple questions like, is this deductible? How can you help me with this educational expense stuff? That stuff I handle day to day, and I don't bill extra for that. Representing in front of audits, Rosa, is a good question. Most of my clients are outside of my state area, so I don't represent them in audits, but I help them from the back end side. So if you get an audit, it's not like I disappear. I go through it, make sure we correct anything that they're looking for, and get you prepared or get you the answers you need to address the audit. Most of the times, Rosa, by the way, audits, it's kind of everybody fears the audit where the IRS agent shows up at your door with a microscope, and that's not most of the audits. Most of the audits are paper audits. In other words, they send you a paper or a letter in the mail requesting further information. Those I do. I do help with those 100%, Rosa. So good question. Tax planning varies, Gail. Tax planning can start at 500 and go up, but it's a pretty in-depth. You get a 60 to 70 page document of tax advice, and then it depends on if you want to do it yourself or if you want my help to implement that stuff. But it starts at 500 for just the plan. It runs up there depending on if you want my help to implement the strategies within the tax plan. Mark-to-market accounting, is this what I should create for my trading business? Michael, I can't answer that without knowing more about your situation. Contact me. I'd be happy to understand your situation and give you the best advice based off of your unique situation. Let's see, Rich, what about forming an LLC now to cover 2012? If you're talking about trying to retroactively get mark-to-market, Rich, I'm not sure if that's what you were talking about, but you wouldn't be able to retroactive mark-to-market for entire 2012. So if you started an entity today, December 1st, you're going to be mark-to-market for December 1st through December 31st. What you did prior to that is already done, and you're going to have to claim that as a just a default taxation cash basis. I do, Bob, consult with real estate and things like that. So yeah, I can help you with that. Morgan, I think that's I don't want to abuse the time here, Morgan. So I think that was more than 5 questions. You're gracious enough to let it go a little bit longer. I've seen some great questions. I encourage you to email me if you've got questions. Just email me and we can converse after that. So I'll turn this back over to Morgan. Thanks, guys.
All right, great. Thank you, Steve. Did you guys enjoy that session? I think that was very good. What we'll do, I know that there's a ton of information covered today, so we will definitely get a copy of this posted on our website, and so that you can enjoy the recording. Well, if you enjoyed today's presentation, be sure to join us on Monday. We're going to do tradingpub.com/Nadex. If you go to that link, I'm going to take probably in about 12 o'clock this afternoon. Anybody that signed up at that link, I'll email you guys a invitation to the live trading. Marilyn, I don't think we can get you the slides, but we can get you the recording. So what I thought I would do is just take another a couple of minutes here. I was just going to go over a couple markets and answer any questions that you guys might have. But I wanted to try to get out of here by about 11 o'clock Central. So we'll do that. But what I kind of wanted to do is start off with the bond market. And I don't know if you guys have heard of this new thing that they've been talking about. Has anybody heard of a fiscal cliff? Has anybody heard of that? You might have seen a little blip on it on the news. So yeah, but I mean, I'm tired of hearing about it. I wish that they would just get a deal done. But again, until we get a deal done, until something happens, the market's going to be extremely news driven. Something that was kind of interesting, and one of the people that I like learning from is Larry Williams. If you guys have heard of him before, but he's been around for a long time now. He's, I think, hitting his 50th year in the industry. But he had a seasonal setup that if you bought the market, with 2 days to go in November, I think like 23 out of 23 years it had gone up or something like that. And so you had a seasonal tendency to rally there. We caught that rally into the end of the month of November. We're going to be getting into the Santa Claus rally, the end of the year type stuff. And one of the most amazing things that I've seen really has been the move in Apple. The fact, Apple went from, and I look at a lot of seasonal stuff too, Arian. Some people don't put a lot of weight in seasonal. They say it's kind of just statistical, whatever. But, I kind of look at it, if it works, it works. But, here's a look at Apple. Again, Apple is definitely kind of the darling stock of the year. Steve, you're listening to him. There you go. Apple was kind of the darling stock of the year. We put in a high at 705 here, and then you see since September it has just been an absolute bloodbath, and Apple down from 705 down to about 500. And you see we bounced off that level, and now we've since rallied back. And this rally, I feel like, because there's been so much focus on the fiscal cliff, a lot of people have missed out on this rally and haven't been looking at this rally in Apple. So what I'm kind of looking for in Apple, I'd like to see it start to stabilize here. We have that little swing low right there, about 570. I'd like to see it stabilize this week, stay above 570, and maybe start to get close to 600 again. Then I might look at a put spread on Apple. So again, that's what I'll look at, probably put spread below 550 on Apple if we can stay above 570 for the next week or so. So again, if we can stay above 570 for the next week or so. So again, that's kind of a quick look on Apple. The important thing to look at is the bond market. And I'm going to throw a chart up there on bonds. How many people trade bonds? Just type in a yes or no if you actually trade bonds. Okay. Now, a lot of people in here will not trade. I'm surprised we've got more people than I thought. A lot of people in here will not trade bonds. I don't think that you guys need to necessarily be a bond trader, but something I've learned, another guy I've learned a lot from is Tony Laporta, and something that I have really learned from Tony is you have got to watch the bond market, regardless of the level I'm watching here on the bonds is this 148 level. You see a lot of support on bonds at 148. If we start to break through 148, then I'm going to expect to see the S&P probably trade up to about the 1445 area. So again, if you see bonds start to break through 148, I'm going to look for the S&P to start to trade up to that 1445 area. And we're currently about 1415, so it'd be about a 30-point move there in the bond market. Let's see, Benjamin, it was Tony Laporta. He's one of our commentators at TradingPub. And he's actually doing a special webinar next Saturday, if you guys want to come back for that. But again, that's kind of what I'm looking for on the bond market. I would not, as far as looking at option trading on this, I would not want to be short calls. So I'll say this, would not be short calls on bonds. Okay, we've got the fiscal cliff here. We got the fiscal cliff coming up, and if that thing goes sour, that thing goes south, you could see a huge drop in the equities market, a huge rally in bonds. But again, you've got to watch the bond market. Typically, I'll say this, typically bonds will move inverse to ES. Okay, so bonds are going to move inverse to the equity market. So if you see bonds very weak, that typically doesn't bode well for the equity market. Now, one thing to watch, if you see bonds stay high and the equity markets are rallying too, sometimes you'll look at it and say, well, I thought they always went inverse. They don't always go inverse. But if we see bonds continue to stay high, then I'm going to be very careful on any long positions on the equity side. Okay, so I'll be very careful on any long positions on the equity side. Yeah, and it's extremely important to watch that bond market regardless of what you trade. Now, here's a look at the S&P. This is the E-mini S&P futures, and you see that basically they, kind of like Apple, it had come down, now it's shot back up. We went down to 1340. If you look at it, we've got some pretty good support in here at the 1395, 1390 area. So again, yeah, I agree with Silver Deer. If you trade the ES, you should always have a bond chart up. And with the VIX, I probably don't watch the VIX as much as I should. That's one thing I need to watch more. I just focus more on the bond market. Okay, here's a question. If the market gaps, do stops have to be honored? Let's talk about this. Okay, let's say that I'm long the S&P at 1415, and I've got to stop at 1400. Okay, I've got to stop working at 1400. Now, if I've got to stop market working, and let's say that later today, politicians come out and say there's no way we're doing a deal, the country's going off the fiscal cliff. Well, obviously, we'd see a big gap down. More than likely what happened, let's say that the S&P gaps down to 1360, 1370, we had a big gap down. My stop's up here at 1400. If it's a stop market, that stop will fill immediately on the open down at 1360. So I'd get about 40 points of slippage. Now, if I had a stop limit order working, let's say I had a stop limit order working at 1400 to 1390, it would not fill. So again, it depends if you're using a stop market or stop limit, but just because you have a stop in doesn't mean you're going to get out at that price, because you would have trouble with slippage. Okay, Rick asked, why have a bond chart up while trading S&P? Like I said, typically bonds will move inverse to the S&P, but the way to really look at it, look at bonds as a gauge of fear. And here's a question. The 30-year bond rate's around 3% or so. How many people, if I told you today, if I said, okay, give me any denomination of money, whether it be $100, $1,000, $10,000, $1 million, give me any denomination of money that you have, and I'll pay you 3% fixed for the next 30 years. How many of you would take that deal? Yes or no? I'll pay you 3% fixed for the next 30 years. How many people would take it? Right. Almost everybody would say no. And why would you say no? Well, you say, well, with inflation, it's not worth it, right? So look at that. We had everybody in this room that said no. Now, here's a question. Yeah, because of inflation. Here's a look at bonds. All right. Here's a look at the bond market. Let's go back to January, and bonds were at 140. Okay. Okay, bonds were at 140 right here in January. Now, we sold off early this year. We've made a low at 145, but think about this. At the beginning of the year, they were at 140. Right now, we're at 149. Okay? Why have bonds rallied when interest rates are so low? And the question, and we had a lot of people, I think, that got killed this year being short bonds, and a lot of people said, well, I'm short bonds because interest rates can't get any lower. The thing that those people don't think about is that there's a risk factor in bonds. When people are afraid of what's going on or what's happening in the market, money comes into the bond market. So you also have some government stuff going on, but keeping rates low. But again, that's why you watch the bond market. And a lot of times, if you guys have listened to Tony, a lot of times you guys will hear him say, if the S&P's up, if the bonds aren't coming off more, he'll say something doesn't smell right here. And that comes from watching the bond market. And so if you watch it, the symbol, Michael, to watch bonds, it's ZB. So again, if you watch ZB, then that can do it. But just try this as an exercise. Watch the bond market with the S&P this week, or if you trade stocks, watch the bond market with the stocks that you trade, and I guarantee you it will help make you a better trader by understanding that bond market and watching it. Yeah, and if you don't have futures quotes, you can definitely watch TLT. Now, another market, and this is a market I really like to the long side. This is the Australian dollar. And, I feel like, do we have anybody in Australia here? Anybody logged in from Australia? Let's see, usually we'll have a couple people who don't. We've got some Southeast Asia, it looks like, but nobody in Australia. Well, I feel like Australia has really gotten through kind of this global downturn probably better than most countries. One thing, they're very resource rich, like Canada. But, I think Australia, in the event that things don't really, yeah, there you go. Yeah, Arian, I didn't know you were bilingual. You spoke Australian. In the event that the market doesn't drive off the fiscal cliff, which I really don't think we will. I think that they'll get a deal. So I don't think we're going to drive off the fiscal cliff. But in the event that we don't drive off the fiscal cliff, I really think this is a good market to trade to the upside. You've got a lot of really good support in here around the 103, 102 quarter area, and this is something that you can trade. This is something you can trade on Nadex. You can trade the Australian dollar on Nadex, and so we'll probably look at a couple of those trades on Monday when we do the live trading. Yeah, TLT will move. TLT is an ETF. Here's the deal. ZB equals 30-year bond. If you look at ZN, that's the 10-year note. TLT is based on the 20-year bond. So again, they're all a little bit different, but for the most part, they'll move in the same direction. I watch the ZB. So again, I'll watch the ZB. All right, and then the last thing I want to look at today, we're going to wrap up because I said we'd get out of here by 11. But the last thing I want to look at is gold. And now this is really an interesting market, and Gail mentioned this about gold kind of being a risk-on trade. Gold is, people go to gold when they're afraid what's going to happen in the market, but they only go for a little bit of bad, if that makes sense. If there's a little bit of fear, they go to gold. If there's a ton of fear and you see a big market drop, they come out of gold and go into bonds. And so you got to be careful with gold. You can't just buy gold. You can't just buy gold and think, okay, if the market goes down the drain, gold will go up, because you see here, there's several days where the market was very negative, in September, and look at what happened to gold. Gold came down. But on a long-term basis, it's really more of a play against inflation. But, I'm kind of watching gold to see if we can come back and hold the 1700 area. I'm going to probably wait a little bit, and I'll look for some opportunities on Monday. But I'd like to see it trade down some, hold some support, build some support, and then start to trade up again before I get back in gold. Frank asked a question. If you go here, Michael, on stockcharts.com, I don't know, that's a futures contract, that's probably why. But if Michael, if you put in TLT there. Yeah, actually, Monday's live trading. There's two ways to sign up. One, okay, Monday's live trading. There's one. If you go to tradingpub.com/Nadex, I'm going to email everybody that signs up there today. That's a free, it's a free deal. The stuff we do at the Trading Pub is free, so we're all about free education, and we'd love for you guys to join us. So again, you can go to tradingpub.com/Nadex. We also are going to be updating. Give me just 1 second, and I'll get this updated for you. And I'll get it where you can if you just want to sign up directly for Monday, if you want to sign up directly for Monday, I'll get that set. It's going to be at 8:30. So again, 8:30 in the morning Central Time, and it'll be about an hour and a half. Let's see, give me 1 second. Okay. If you go to this website, Marcel, I am the founder of TradingPub. So there you go. If you go to tradingpub.com/events, hopefully that will take you to the right page. If you go to tradingpub.com/events, it should say live trading session this Monday. You just hit register here, and you put your info in. Put your info in there, and hit register, and it'll email you the invitation. So All right, guys. One last thing. I'm glad you enjoy it, Steve. One last thing, if you can. All right. If you can answer this poll, again, just let us know your thoughts on the webinar. Again, it's 11 o'clock. Yeah, we'll look at hey, Bob, on Monday we will look at gold, and we'll look at it in relation to the, to the S&P. But hopefully you guys enjoyed today's event. I want to make sure whenever we do events that we provide really good education for you, and hopefully we were able to do that. Tell your friends about the Trading Pub. Here's a link to send them if you want to invite somebody. If you want to invite somebody to Monday, the free live trading session, send that link to them, and we hope to have you there. And again, like, Steve, if you're still here, if you could put in your email address one more time. I know that we had a lot of questions about that people can probably contact you directly. I think I can put it back up there. There we go. So you guys can contact Steve directly. Really good guy. Enjoyed getting to know him, and we'll definitely have him back. There you go. info@shrinkmytaxes.com. So we'll definitely have him back very soon. So thanks everyone for being with us, and we look forward to seeing you guys on Monday.